What's up, pioneers and crypto enthusiasts? Welcome back to another episode of Zaki Crypto Update, where we dive deep into the latest trends, market shifts, and blockchain breakthroughs. Today, we're unraveling one of the hottest topics in crypto right now, the recent plunge in PiNetwork's price. Whether you're a long-term believer or just crypto curious, stick around because we're breaking down every detail behind this unexpected dip. So let's jump right in. Before we get into the nitty-gritty, let's set the stage. PiNetwork has been generating buzz, especially among its loyal community of pioneers, as well as investors keeping a close eye on emerging cryptocurrencies. As of March 20th, 2025, PI is trading at about $1.11. That's a 4.96% drop in just 24 hours and a staggering 32.59% decline over the past week. With 6.8 billion PI tokens in circulation and a market cap of approximately $7.63 billion, the numbers tell a compelling story. Now, what exactly is causing this significant price drop? Is it merely a temporary setback or a sign of deeper issues? Let's break it down. There are several factors at play here, and we're going to cover them one by one. We'll start with the broader market trends that are influencing the entire cryptocurrency landscape. Firstly, it's important to understand that the crypto market is no stranger to volatility. Recently, we've seen considerable fluctuations in major assets like Bitcoin and Ethereum. Global macroeconomic uncertainties, shifting regulatory landscapes, and evolving investor sentiment have all played their parts. As a relatively young token still in its early adoption phase, PI is particularly sensitive to these external forces. When traditional market influencers like inflation data or policy shifts send shockwaves through the financial world, crypto assets aren't immune. This broader downturn has contributed significantly to the pressure on PI's price. Next up, one of the biggest catalysts, the Open Mainnet launch. For many in the community, the Open Mainnet has been a beacon of hope, signaling a new era of adoption and value for PI. So why hasn't it propelled the price upward as expected? While anticipation for a successful launch was high, repeated delays and a lack of clear communication from the PI core team have sown uncertainty. Investors who were eagerly waiting for a price rally ahead of the launch might have opted to liquidate their positions, fearing that further delays could mean a longer wait for value realization. This hesitation has directly contributed to the current downward trend. Another critical factor is liquidity, or rather, the lack thereof. Despite having a massive community of pioneers, PI remains largely unlisted on major cryptocurrency exchanges. This limited exposure restricts access for mainstream traders and institutional investors, making the token more susceptible to sudden price swings. Without the backing of prominent exchange listings like Binance or Coinbase, even relatively small sell orders can trigger significant price drops. It's like trying to navigate a busy market with very few trading lanes. Congestion leads to instability. Let's not overlook another hurdle, the KYC process. While millions of users have already passed the Know Your Customer verification, a sizable portion still remains in limbo. This delay in migrating their tokens to the Open Mainnet has created confusion about the true circulating supply. Such uncertainties naturally impact market confidence. When traders aren't sure how many tokens are actively circulating versus locked and pending migration, it can exacerbate sell-offs, driving prices down even further. Alright, so we've seen the challenges. But what does the future hold for PiNetwork? Despite the current downturn, many in the community, and yes, even some seasoned analysts, remain optimistic about the long-term potential of PI. Let's explore some of the key factors that could spark a recovery. First, a seamless and well-executed Open Mainnet launch could be the turning point. Once the migration process is streamlined and clear communication is restored, investor confidence could see a major boost. A successful launch would not only validate the PiNetwork's potential but also attract new users and traders. Imagine the market reacting to clear, transparent updates. It could lead to increased demand and, ultimately, a rebound in PI's value. Next up is the expansion of PiNetwork's utility. If PI can find broader applications, particularly within digital payments and decentralized finance ecosystems, it might see a surge in demand. As more merchants and platforms integrate PI for transactions, its value could receive a significant boost. New use cases could transform PI from just another digital token to a vital currency in everyday transactions. Another potential game-changer is regulatory clarity. As governments around the world finalize crypto regulations, institutional investors may feel more confident dipping their toes into the market. Clear rules mean reduced uncertainty, making PI a more attractive digital asset. And let's not forget about the possibility of major exchange listings. If PI secures a spot on a platform like Binance or Coinbase, that could dramatically improve liquidity, expand its investor base, and stabilize its price. Now, a question on many pioneers' minds. Is this price drop just a temporary setback or indicative of deeper challenges within the PI ecosystem? The short answer is that it could be a bit of both. Short-term investors might be worried about the current losses, but long-term believers see value in the underlying technology and the community's innovative approach to mobile mining and decentralization. The crypto world is notorious for its ups and downs, and sometimes, a dip is just the calm before the next storm of innovation. As we wrap up today's update, here are my key takeaways. The current price drop is undoubtedly concerning, but it also highlights the challenges and opportunities that come with any emerging crypto asset. The PiNetwork's journey is far from over, and while there are hurdles to overcome, the potential for growth remains on the horizon. Remember, the crypto space is inherently volatile, and staying informed is crucial. Whether you're an active trader or a long-term believer, keeping a close eye on developments, especially regarding the open mainnet and regulatory updates, will be key. I'd love to hear what you think about PI's future. Do you see this dip as a temporary hiccup, or is it a sign of deeper structural issues? Drop your thoughts in the comments below, and let's get a conversation started. Before we sign off, here's a quick reminder. This video is for informational purposes only and should not be taken as financial advice. I'm not a financial advisor, and you should always do your own research, or as we like to say in crypto, before making any investment decisions. Thanks for tuning in to this episode of Zaki Crypto Update. If you enjoyed the video, make sure to hit that like button, subscribe, and click the notification bell so you never miss our deep dives into the world of crypto. I'm Zaki, and I'll see you in the next update as we continue to explore the future of digital currencies and blockchain innovation. Stay savvy and happy investing.